Hi there traders, Steve Miley, the market chartist here for FX Explained, and today we're going to look at the US dollar versus Canadian dollar, USDCAD. Well, a more negative theme trying to resume in here. We have had this push higher in here, dollar CAD higher for the early part of September, actually reversing this longer term trend line that comes all the way from March in here, back here earlier in September, early part of last week. But the market recoiling back lower from 132.59 below this resistance up here at 132.72 has taken out some notable resistance, but nevertheless recoiling back lower as we move back into more of a risk on phase. So equity markets moving back to trying to push back towards more risk on. If we go and take a look at, say, the S&P 500 US benchmark in here, trying to put a base in here from just below 3,300 on the futures contract, rebounding in here on Friday and to start this week. So that kind of shift back towards risk on is seeing a US dollar. The correlation with risk on at the moment is US dollar weakness. So we're seeing US dollar weakness coming back through, and then obviously also some Canadian dollar strength. You know, if we get to go into a risk on environment, it would imply that then a stronger global economy, positive to the US, positive for the Canadian dollar in here, particularly as an exporter of oil. So dollar CAD in here pointing lower with that kind of shift more to a risk on theme. Downside targets in the very near term, 131.14 and 130.83 below, with potential going into this week back to 130.33 and even down to 129.90, that very early September low. On the top side, if the market takes out this resistance around 132.0307, then it could easily be back up to the peak there at 132.59. So whilst we stay on the risk on theme in here, we're certainly looking for a more bearish tone for dollar CAD. This has been Steve Miley, market chartist for FX Explain. I'm going to wish you all a great trading day, and please do stay safe out there.